Welcome, everyone, to our private equity panel. We're happy to have back on a pair of thoughtful financial acquirers to start the year off with their insights. We're joined today by Sumit Aneja, founder and managing partner at GC Partners, and Jeremy Holland, managing partner at the Riverside Company. Thank you, everyone, for joining us today. Let's start with a quick round of introductions. Sumit, go ahead and kick us off.
Hello, everyone. I am Sumit Aneja. I'm the managing partner at GC Partners. I've been in investment banking, international monetary fund, but for the past 8 years or so, I've been an operator. I was the CEO of a software company called Voxpo in Montreal. We scaled it almost 2.5 times in less than 4 years and sold it to a PE fund in the US and started GC Partners to invest in more mission critical software companies in US and Canada. And very recently, we announced our GRCS Trust platform under GC Partners that we're very excited about. It is the intersection of GRC and compliance, and that's a platform we're building. Here we are.
I'm Jeremy Holland, managing partner with the Riverside Company. We are a global private equity firm ranging from a fund in Europe, one in Australia, and a handful of strategies here. Our expertise is primarily working in the lower middle market, that entrepreneurial size company. I've been a private equity investor for well over 25 years. And so this has been my sole career focus, helping entrepreneurs get to the next level.
Excellent. Let's get straight into it. You've had a chance to look over what we think will be trending in the coming years. So what are the key tech trends you are seeing that tech company CEOs should prioritize in 2026? Let's start with you, Sumit.
Another trend the CEOs should look at is before COVID, everybody was working in the office. And now our expectation as CEOs is to get everyone back in the office. But it is not happening. Guys, let's just face it. People are comfortable working from homes. They don't want to have the long commute. They're productive where they are. But at the same time, one downside of working remotely is there are some bad actors where you don't know what people are doing with the systems, what they're doing on the endpoint, and that creates sometimes compliance and insider threat detection risk. So let's take an example. If you had an employee working remotely, giving credentials to someone for money, for whatever reason, disgruntled employee, there's no way to tell if someone is getting into your system with the right credentials. That creates a big security hazard. So all I would say is we really want to encourage remote and hybrid work, but have the proper guardrails around it, have proper vigilance, what your employees are up to, they're representing you, have them, enable them to be really productive, hybrid or remote, but make sure your company and the data is protected. That is a trend I will say CEOs should focus on.
Thanks, Sumit. What about you, Jeremy?
CEOs have the opportunity to prioritize workflow-centric AI and autonomous agents. AI is moving beyond assistants to agents that handle multi-step, cross-functional work across finance, HR, service ops, what have you. And that shift is reducing repetitive activities, lowers cognitive load, and enables teams to focus on higher value decisions. So companies that adopt these tools can simplify workflows, improve accuracy, speed, and capacity for growth.
Excellent. Well, continuing on this topic of key trends, among the top 10 trends that Corum has identified that I spoke about last month, are there any in particular that you are excited about and why? We'll start with Jeremy this time.
People-centric productivity, particularly in blue-collar industries where labor drives the P&L. So while the media whips up fear about AI eliminating jobs, we're seeing it utilized much more in terms of retaining experienced employees through making their job much more strategic and productive, which increases job satisfaction. It's great to see companies accomplish more with the existing headcount. Our portfolio represents examples across a range of end markets. In hospitality, Unifocus improves labor forecasting, scheduling, and frontline productivity. Down in Australia, we have a company called Dingo, which serves asset heavy sectors like mining. It uses predictive data analysis to optimize preventative maintenance, avoiding equipment failures and maximizing uptime. And a final example is Align Ops, which helps construction and field service companies keep projects on schedule by giving contractors real time visibility to track tools and equipment, manage crews, oversee safety, and streamline logistics.
Great. Thanks, Jeremy. Now, Sumit, same question.
The first trend comes to mind when everybody's talking about AI. So people-centric productivity in age of AI is trend number one that I would consider. So AI has become a really powerful productivity tool. Employees use it to draft emails, summarize documents, analyze data, and respond faster to customers. In many cases, they're copying and pasting the information directly into AI tools such as ChatGPT, Perplexity to save time. This is where productivity and compliance collide. So I'll give you a simple example. Employee is working with customer data that has some PII information. They base it a portion of data to summarize it, analyze it. So they're trying to be more productive, get some more insights from the data. They're not trying to create risk, but that moment sensitive data leaves your approved system, compliance and privacy issues appear, and sometimes without anyone realizing it. So the challenge for companies is not stopping productivity, it is enabling productivity safely. That is one of the reasons we've invested in a company called Currentware based in Toronto. And that is exactly the trend we are enabling. We are not, the trend is, the thinking behind is what we're trying to solve for, we're not trying to restrict any activities, but enable the employees so they can go fast, but know where the boundaries are. That will be trend number one. The second trend we see is that CIOs today, especially in mid-market, are overwhelmed with disconnected information. Most organizations have separate systems for policies, access, IT activity, and security. Each system generates a ton of data. Very little is connected. Simple example. A company has rules about how personal data should be handled. An employee's action creates a compliance concern. So that signal appears in one system, but the leadership never sees the full context because there's no single pane of glass. Nothing is technically broken, but all these systems are not talking to each other. So what we are building at GRCS Trust Platform under GC Partners is that we're trying to connect all these disparate information for the CIOs to create that one pane of glass to reduce compliance and security mishaps. Last trend I would talk about is digital trust. So as AI tools, automation, and the remote work scale, it becomes harder to know who or what is acting inside the systems. Is it an agent taking the action? Was this action taken by a person or an automated process? Who is responsible if something goes wrong? Was sensitive data handled appropriately per the regulations where you're operating in? Is the activity expected? Does it need attention? So the digital trust sits at the intersection of governance, risk, compliance, and security for us. And that intersection is exactly where GRCS platforms create long-term value. When we look across these trends, AI-driven productivity, connected inside across systems, and digital trust, they all point to the same conclusion. Most successful organizations will be those that embrace the modern productivity tools while building trust and compliance directly into how work gets done. Essentially enabling productivity, but having the guardrails around it. That is the lens which we are building GRCS Trust and investing in this space very actively.
Very good. Finally, a key question for all the CEOs and founders in the audience. What characteristics make a technology company an attractive M&A target for you? We'll start with Sumit.
For us, what we're looking for is a company between $3 to $20 million in ARR that is cash flow break even or cash flow positive, based in US or Canada. That is a rule of 40 company. If you know any of those companies, we're happy to acquire them, especially under the GRCS Trust platform, where we put some additional committed capital to work. And we are very excited to scale the capital and put more capital to work in that umbrella: governance, risk, compliance, and security. If you combine all the dots, that makes it a really attractive acquisition target for us. From a partnership perspective, as I mentioned, we have a company called Currentware that helps with employee productivity monitoring, insider threat detection, etc. Now, we are partnering with many companies that have security operations, SOC operations, continuous threat monitoring, and selling into the SMB market where we can connect the dots with Currentware. So those will be really good partners for us.
Thank you, Sumit. Over to Jeremy.
Two attributes that come to mind are growth opportunities around white space and the expansion of total addressable market. In terms of white space, an example is a blue collar industry digitizing for the first time, where we're replacing clipboards and spreadsheets. And so rather than having to convince the customer to rip out an incumbent system, these opportunities often lead to clear productivity gains, resulting in happy and sticky customers. Expanding the TAM can come in any number of ways, but could be using our captive programming capability to add modules for automation, analytics, compliance, etc. Also, we enjoy opportunities to leverage Riverside's global footprint to scale an Australian company into the States, or from here into Europe and all the other intercontinental permutations that can create a game-changing geographic expansion.
Great insights, everyone. Thanks again for being online with us today. We're looking forward to working with you in the new year.